Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. The earnings parade continues. I don't know how many reports there are just between this morning and last night, but there are a lot of them. We're going to talk about the weakness in stock companies that are reporting great earnings. The weakness continued yesterday in tech. We'll talk about that. We will talk about the divorce trade, apparently. That's the thing I learned yesterday / this morning. Dennis can enlighten us about that. We'll take questions from our chat. Two guests on the radar today. Nick Shaheen will join us at 8:35, and then at 9, I'll be joined by Jeremie Capron. He is a director of research at ROBO Global. They've got a number of, I guess you can call them growth tech indexes and ETFs. We're going to talk about automation, robotics, healthcare tech. That'll be with Jeremie at 9. In the meantime, everyone, go ahead and smash that like button, please. And thank you. We appreciate that. Likes make my day better. Okay, Joel, how are we doing this morning? Let's bring up your charts. We did drop a few minutes ago there. Are we still down?
Yeah, we got some action, Jackson. I feel like, I don't know. I feel some volatility coming up. Maybe our show will finally get popular again if this market starts going into tank to have some volatility. It was weakness yesterday. We talked about that on the At the Close show. Tried to climb in the 4,200 handle. No can do. Turned around. Was weak the last 15, 20 minutes. Pre-market low, 41.62, folks. And, man, we're sitting on some major support here. And we had 4 lows in this area. That's going to make me bearish. Breaking below this 41.60 and closing below. I'm going to call a top if we do that today. Crude, that's up $1.01 at 65.50. That's a good day for crude. Gold repelling off 1,800. Just can't get through there. Down 850 at 1783.20. And silver, that's down about 9 cents at 26.67. And Bitcoin just having problems at 60,000. We're down $1,450 at 56,314. Before we go to the divorce trade, I did get a question, and I want to try and address these at the top of the show. And it said, I'm going to read it. It's not necessarily a term, but when you and Dennis talk about buyers are going in and sellers are going in at a certain level, is there, what do you see there? How do you determine that? Is it based on candle price levels or something else? I'll give my answer, and then Triple D will want to add. You can tell by the charts a lot. And on the daily charts, if I see 2, 3, 4 highs in the same area, that's how I look at it. You could also look at open book for New York stocks. And then the other more tricky way, which Dennis has a better eye for, is when there's iceberg orders out there. And an iceberg order is they just have 100 shares in at Apple at 132, example. and a person buys 500 and 100's offered. Then a person buys 2,000 and there's 100 offered. And then a person buys 5,000 and there's 100 offered. So that's for intraday trading. Like I said, Dennis keeps an eye on that more. But the charts tell you, and the New York Open Book tells you also. Dennis, you want to add anything to that?
You did it perfectly. That was perfect. I can't even add anything.
Yeah, wow, you complimented me.
Yeah, there you go. I never give you compliments.
I need
Look how
a
nice
tissue.
I am today.
I need a
I must
tissue.
be having an okay day because I'm giving compliments out.
All right, let's go. We got to start with the divorce trade. I mean, it's kind of
The divorce trade.
Spencer made
it's not
it
working
up.
that well.
No. But go ahead, Spencer. Give us the news.
Apparently, hold on. I was told my mic was too loud, so I just turned it way down. So let me know if that sounds better, everyone. No, the news was that Bill and Melinda Gates are getting divorced, which we all know by now. We all heard that headline yesterday. But apparently, Dennis, there's a trade to make there.
I just thought if they're getting divorced, they're going to be selling stock to raise money for the divorce. They both own a lot of Microsoft shares still. I know they own a lot of other stuff, but I was like, can't be good for Microsoft. There could be potential sales coming in. So obviously, we know insiders sell for a lot of reasons. Divorce is one of those reasons. So there. I thought there was a trade there. I actually went shorted on the headline. I've covered most of it now. It's down significantly, but this is market effects too. I don't think it's like, whoa, yeah, I hit Microsoft. I just thought, it's some
not good news.
Yeah, it's not good news. And it actually, if you look at the initial headline, I was involved in that. It got hit on the initial headline. So I don't think it can be construed as good news. And obviously, you feel bad for them. They were together for a long time. But I mean, as a market, as a trader, I'm just looking at it thinking, okay, they're probably gonna have to sell some stock. So if the market thinks that too, it could go down. And the market did think it a few minutes later. It did go down. Now it's kind of down just as much as the Qs. So you can say, but from a relative speaking, on the Qs being down just as much as Microsoft, there really wasn't much of an edge here.
How old is Billy?
I'm sure.
Oh man,
Sure he's in his 60s.
He's in his 60s.
I think early 60s.
Because they said he's been married for 27 years, and I know I'm not in my 60s, and I mentioned this 1,000 times before, but Lisa and I met 37 years ago today. That's when we met. Was 37 years ago today. So it's a long time. The Microsoft chart doesn't look good at all. Losing this 250 is not good at all. This didn't even try to fill the gap off the earnings, and you're wide open here. I mean, you got a pair of lows. Yeah, you could say, wow, there's a double bottom here. Where's that at? I'll give you that levels because that will be your next support level. You got a pair of lows. Let's call it 246.50, right? No, a little bit higher than that. 246.60. It's called 247. That's your net stopping point. But man, I mean, this is wide open between 235 and 250. I don't want to get caught up in that. So that's what I'm looking at for Mr. Soft.
All of the big cap, whether they report good earnings or not, have all now turned ugly.
Amazon.
The only one still holding up pretty well is Facebook, and it's leaking too. But Amazon, great report, big buyback, horrible candle yesterday, down again, is now trading below where it was before it reported the blowout earnings. Apple, same story, blowout earnings. We know it came down immediately. Microsoft has never, it tried to bounce a little bit there yesterday, but we know it got hit on the good earnings. So this market is just unforgiving right now from an earnings perspective. It has not been a good earnings season, really, the reaction to the earnings. Where you saw last week, very good reports, and the market really didn't find a reason to buy those stocks. They found a reason to sell those stocks still. So again, this market has me nervous, but the rotation continues to keep SPY up. I mean, SPY had an okay day yesterday, despite a lot of tech really getting hit. Growth tech got hammered again. We've been talking about that. They all got hammered. All the smaller growth names like your Fubos and your Space, maybe not Fubo, but Space got hit right down to that $20 level, the key $20 level. I mean, you just keep thinking, okay, well, these things have bottomed now, and then they start to leak again. So again, I showed last week, that the death by 1,000 cuts, I do believe we're in that in a lot of the growth names. I do believe the path of least resistance is lower for a lot of names. Stocks like Amazon, Apple, Microsoft, there's value there, though. I own all those. I own all the mega caps. There is some value there, but again, they're still stretched. I mean, everything, what we were saying, 2 days ago, or Joel, or maybe it was yesterday, is everything is overvalued. Every single thing. Real estate, stocks, crypto, NFTs, we're just throwing money at nothingness. I mean, and then you've got cash, which is problematic too, because you're losing to massive inflation, which we're seeing right now. So it's trouble right now. Like, where do you put money? I kind of just diverse because I don't know. Ethereum is working well for me, but how long does that work well before that starts to roll over too? So again, SPY has been the best place to be because the rotation keeps us up. And yesterday, what started bringing us up? The new cores. The rails were starting to show some life there again. The industrials, we're seeing the transports show some life again. Where a tech starts to show weakness, rotation keeps us up. This morning, you got oil. Oil stocks trading higher. You got some of the financials trading higher. U.S. steel, which I did end up buying U.S. steel on the dip. I couldn't help myself. I was like, I think we're still going into, pun not intended there, I think we're still going to, need more for building. So new core I've had. U.S. steel got hit on the earnings. I was like, you know what, I'm going to buy it. And I ended up buying around $22. It's $25 a couple days later. So that's been where the money is rotated to. Does the money start eventually rotating out of everything? I don't know. We haven't seen that happen yet. It doesn't know where to go. So that's why it doesn't rotate out of stocks, because it has no other home.
Yeah, I don't know about it.
It has no other home.
No, I agree. The rotation can keep us going and going and going. I think one thing kind of lingering that we haven't paid a lot of attention to, but you talk about is, how are we going to pay for this infrastructure? Is it going to be higher taxes? Higher taxes are not going to be good for the individuals. It's not going to be good for the corporation. So I think that's an overhang. We haven't heard much about the financial transaction tax at all, but just little things. And just the way we're reacting to earnings here, just doesn't give me a good feeling here for the month of May. I'm not bearish yet, but I'm definitely neutral, and I'm not super bull.
I'm kind of neutral too.
Yeah.
I can't get bearish because SPY, the rotation just keeps us up. I'm bearish all those growth names, or those small names that are trading 50, 60, 70 times sales. I mean, and we've talked about these names a lot. Like, look at DoorDash. I said last week, I think this is a rally to sell. I said it in DoorDash. I said it in a lot of stocks. Now you got DoorDash down 25 points and going to be knocking probably eventually on that 120. Again, you got to come and say, though, okay, we just sold off 25 points. And people are like, oh, I sold it at 139. Now it's 150. What happened? It's the same thing Tesla. People reach out to me. Then what happened with that candle 2 days ago? Well, I don't know. We're still in a chop and slop market. You're buying dips and you're selling rips. If you're coming in and selling your stock on a day that's getting down $50, you're doing it backwards. You're in a contrarian market. You guys, if anybody who started trading last year does not know what that is, because we haven't had it. You're in a contrarian market where fading the moves is working on everything. The fade trade is back. And if if Tesla sells off 30 and you're like, okay, well, it's going down now.
How about that going right back down?
30
going right back down. It went right back down.
Yeah, because it did go right back down. It was another selling opportunity. This market just gives you opportunities and gives you opportunities. But you know what? Now you're getting back down to that low, 666. So am I selling it here now as a trade? No, I think you got to wait till it gets a bounce. But again, long term, it's not going to my account. I still think Tesla could be a $400 stock when we look at it if it starts to get really ugly. We don't know. Anything can happen. Tesla's the darling. If EV starts to get hot again, Tesla will lead the charge. So it's a hard one to pick on. But, I mean, any of those other EV plays have all just started rolling over again. So, NIO's sitting there. They're all sitting there. Some are trying to hold some support. But XPEV started breaking down through 30, 28.5. I think these things could go a hell of a lot lower. People think, oh, well, it was 50. It's down to 28. Where can it go? Things could go to $5, and then you lose. And that's what people don't realize, too. When a stock loses 90% of its value, the person that bought it at 50 is almost as dumb as the person that bought it at 30. Because if the stock goes to 2 or 3, you just lost basically all your money. So you've got to be careful and just thinking, well, where this can the stock go? It's got to bounce back. They don't have to do anything. Again, we're talking bearish on a day that we're down. So I'm not looking. Right. I'm not looking today. Well, what can I sell? I'm not looking like that in my long-term portfolio.
Well,
I'm looking. Well, if you're long term, maybe you are. But the way I do it in my long term portfolio, I still try to time it. I sell on the up days and I buy on the down days. If I want to be buying stocks, I look at what's down. If I want, like US Steel was down in the earnings, I was like, I don't think that story's over. I don't think the building construction story is over. Yeah, maybe commercial is not doing as well, but residential is just kicking ass and taking names. So I don't think that story is over. So yesterday. Or 2 days ago on the earnings dip, I was like, I'm going to nibble in there. So I bought some. But, buying the dip on a stock that I want to own, not just randomly buying the dip on anything. But if you're loaded up with growth stocks, you got to use those rallies to lighten up, I believe. That's what I think. That's my story, and I'm sticking to it.
All right. Is this X like long-term, a swing, or how you looking at it?
But Rosie making a good point. So I don't know what Joel and Dennis are talking about. And we'll come back to the X. All of my stocks are down 42%, so they're overvalued. Yeah, that's what I'm telling you. I'm telling you that some of these stocks had no business being where they were. So you can't judge a stock on where it was and say, oh, now it's cheap. You have to look at what is it still trading? What is the valuation? We did this exercise with NEO. So you could say, okay, well, NEO was 65. Now it's 40. Oh, it's cheap. But then you go and look, and it's trading with a market cap as much as General Motors. A company that's been in business for 100 years, a company that's going to be a leader in EV.
Oh, but China's going to support them. China's going to support them.
Well, they didn't support Luckin Coffee. So, I mean, we're not comparing it. It's a joke, but they are making cars, so this is a viable business. But should it have a market cap of $60 billion?
No.
It shouldn't have been $80 billion. Should it be 60?
No.
Maybe the fair market cap on that is more like 10 billion.
Jinx.
So if you look at that, dude, Shinks. So if you look down to that takes the stock down to about $6, $7.
It was.
That could happen. I'm not saying it's going to happen because this market could just go crazy. Maybe NEO is going to turn around. Maybe NEO is going to be the next Tesla. Maybe NEO is going to be the second best, production. But when you look at the market caps and you say NEO at 60 billion, then you go to Honda Motor Company. A lot of Hondas on the road. Let's go check out the market cap of Honda, HMC. It'll be higher, but it's not. 51 billion. So NEO is trading with a market cap more than Honda. That is stupid. In this market where valuation is starting to matter, that, in my opinion, is craziness. So would I buy NEO on this dip? Absolutely
I'd never buy
not.
NEO. I never will buy it.
Yeah, but everybody thinks it's cheap because it came from 65 to 39. It shouldn't have been at 65. It shouldn't have been at 39. It probably should have been a hell of a lot lower. Now, again, story might get hot again. If story starts to get hot, things can change. But right now, this market is moving to low PE. We've been talking about it for a month, 2 months. You gotta identify the rotations and be positioning yourself. I was loaded up with all this names. I had NEO long. I had Space long. I started selling those names a month ago, a little bit late, but I started selling all those names when I realized this market is moving to lower PE stocks. This market is starting to care about valuation. NEO, which is going, does it even make money? Does NEO make money?
I don't know.
Spencer? I don't think so.
No. So we're back to like where we were in March 2000, where companies that don't make money are guilty until proven innocent. I think you sell rallies in NEO. So just my opinion. This is just my opinion.
You talked about the rotation into lower PE, and you've already named a bunch of those things. But also, we didn't mention retail, like XRT. Had a nice day yesterday.
Yeah, well, there's a lot of some of those retailers were really beat out. Now again, but do I want to hide in this? I mean, I don't know. Some of these low PE names aren't that low anymore. It's such a tough market. So people want to know what to buy. What do I buy? What do I buy? Sometimes it's just best maybe you don't buy. You just trade. I buy and sell stocks every day, but I'm not adding much to my long-term portfolio. I added US Steel. I'm not adding much. I'm nibbling in on a few things here or there. I sometimes buy some indexes. I bought some Ethereum a couple weeks ago because I like the NFT story. But I'm sitting with a lot of cash, which is like, losing to inflation, but at least it's not losing. So I don't know, like the long-term portfolio. It's really tough. It's a tough investing market right now. It is a tough investing market.
All right, let's go some earnings stocks. As the S&Ps continue to crater here, We are now taking out the low from last week. No bids in sight here. Continue to fall. We're getting into a real open area here, folks. So be careful. Buy dippers will come in on the open. It's just how low do we go first? Go ahead, Spence.
Let me start with SmileDirect, which I don't believe was on the schedule to report. I think they pre-reported because they also disclosed a cyber security incident that they said was all good now. This is from back in mid-April. But while they were at it, they reported for the first quarter their EPS was lower than estimates. Their sales was higher than estimates, but not by a lot. And they gave some. I'm sorry, that was their Q1 EPS guidance that was lower than estimates. Their guidance was lower than estimates. Their sales guidance was higher than estimates, and Q2 was more or less in line. Plus a cybersecurity incident from mid-April.
I'll just make a long-term observation on this, and then we can drill down, taking out 10, which was support. But basically, since the IPO, the stock has told you to stay away, right? IPO, month high, all-time high, never even come within $6 of it. Yeah, it was a bargain back in March and April, and it got a little pop. But to me, I look at the stock and be like, this is an IPO that hit its high early. I don't know when it's ever going back. So getting hit near the, I mean, it's never shown. I maybe draw a trend line here off that high and that high, and if it bust above there. But like this stock chart is telling you that this is not a good long-term investment.
Stocks in a clear downtrend, which a lot of the growth names are. The lower P's or the higher P, the higher valuation, the higher growth names are all in downtrends. That hasn't changed, even despite the rally that we had a week ago. And you can see the nice SmileDirect rally. That was what, when I was pointing it out, and I was pointing it out with those tweets, I was showing the cues. Like, are we here? Is this the rally to sell in these names? And it's starting to look like 3 days later only that maybe it was. Now, you do a support down here at 9. Is there a bounce trade maybe at these two lows, 965? Maybe, but you're trying to catch the falling knife here again. And it's a difficult trade to trade. It's always been difficult to do.
Look how look at what I did there, Dennis. Look what I
drew an X. Does that
mean it's a
triangle?
That mark.
I like the X.
No, it's a triangle. Look how
all right, so you go above or below it.
And now you're busted down. I mean, you can't get bullish until you break above that blue line. And it's almost time to start getting really bearish. You do have 2 monthly lows back here. Maybe you got some work to do under $9. I see 2 monthly lows, not daily lows, monthly lows. Let's call it 875. But there it is. That's a nice triangle. Or is that a rising wedge? That's a rising wedge, isn't it? They're trying to rise.
You're the technical analyst. That's what's the spot.
I think I did great.
X do not trade.
Who likes that in the chat? Say you like my drawing.
Chat's all over the X.
All right,
Little Bill said nice X.
Look at that, Little Bill. Thank you, Little Bill.
So from a growth stock that we hate, maybe there's some lower PE names that we might like DuPont. I almost said Dow DuPont. DuPont, which is DD, had earnings this morning and they're up, and that's a lower PE name.
Yeah, see what it does on earnings. 75 critical support. Yeah, this is the kind of name that the market could buy. It's not that great. It's not reacting well to the report, though. I would say, this is obviously nice. So it's held support. 75. Bulls are fully in control as long as above 75. So if you want to take a flyer, you got to stop yourself up below 75. I don't love the way it's responding so far, but it's early, so it might start to respond better.
I'm just looking at the daily candles corresponding with the monthly candles. And I mean, let's get up to 80. Let's get over 79, 79, 79 and a half. If you can get there, we're still a couple bucks away. Then you bust out, you go up and test the 82. But I think the longer you take to clear out the paper around 79 and a half, 80, I think the more chance of this thing rolling over. It's tried a few times, but just can't bust on through to the other side. S&Ps, again, we are continuing to make, yes, it is. Do you know who it's by?
No.
Come on. I know Spencer knows.
No,
Break on through to the other side. Break on through to the other side. I don't know.
I know it, but I don't know it. So.
Oh, come on. What is that, Millennium Show? Andrew Garber knew it.
I'm
All
sorry.
right, it's the Doors.
Oh, it's
one of the greatest groups of all time.
Yeah, makes sense. The
I
Doors.
said-
Break on through the door.
I said I know, but I don't know.
This is the end.
This
That's
Wait, can
All right.
I actually tell you guys?
just the end, my
You
friend.
tell me anything you want.
To go on a quick tangent.
Yeah.
You guys were both in my dream last night.
Oh my goodness, I'm scared.
Yeah, no, the dream was that we didn't do a stock market show. We did like a hockey like post game show, and
That
then
would be fun.
and then Joel was like, he was like, all right, today's my last show. And I was like, what? And then Dennis texted me. He's like, oh yeah, if Joel's out, I'm out. I was like, what? And so then I had to do this hockey show by myself. It's freaking horrible. That was my
Just talk Connor McDavid highlights for an hour.
that was
Good
my
to go.
this night.
Dennis is
91 points in 50 games. The guy's a menace.
I sorry for the tangent, but that
God,
was my
another leg down here. Dennis is definitely the Don Cherry lookalike.
sure.
Like,
Okay,
you just can't say that "you people" thing.
You gotta watch.
You get
what
fired
say.
for that. There's no "you
Oh
people"
man,
comments.
what is going on, Dennis? You see his selling balances out there? What are you doing to this market?
That's a new low of the set.
No, you know what? There's actually some. The balances aren't showing this. There's actually a few buy imbalances kicking around here. So, but the market's leaking. I mean, we're in this market. You're buying dips and you're selling rips. This is the
I don't know
market that
about
we're
this
in.
dip.
All
Be
right.
careful on the dip.
So
buying.
yeah, well,
So on the
you
rip,
got to be selective. I'm saying value names. I'm buying value stocks on dips. That's the way. U.S. Steel, I feel like right now it's a cyclical, but right now it's deemed more of a value stock. I'm not looking, at these high growth names on the dips. And, obviously even some of the, Apples and Amazons, which aren't even way overvalued, but they're slightly overvalued to where they usually are. They've been getting hit too. So I don't know. Tech's out of favor right now. There's no doubt about it. Tech is out of favor.
I'm glad Lisa.
And small cap.
I'm glad Lisa has the day off tomorrow because I can maybe talk a little market sense to her, and we can.
Still trying to sell these stocks, the Pelotons and Joel's and all these high multiple.
I'm
names.
not in all these
Zoom.
high multiples.
This Zoom's coming at this 300. It's better hold 300. Peloton, same thing. It better hold that March low of 94, Joel, and it looks like it wants to challenge it. What a gift, man. This April rally from 100 to 120 when Kathy was loading up. What a gift. What a gift to sell. I just got to think Peloton. I think the path of least resistance is lower. Sorry. I maybe it's going to be a value stock eventually. It's a stock you could get interested somewhere, but 170 down to 95. It's safe to say that the Peloton story has cooled off substantially.
This is the only one where I said, let's pick a level. Let's say if it takes out a level, we're going to get out and reconsider. That level was 130, and it cut right through it. I tried to talk to her, and then of course it rallies back to 120, and she gave me the business on it. But whatever. All
right, chat wants to talk about Corsair, CRSR. So let's go there because they had an earnings beat and they raised their guidance this morning, and the stock is up.
I own this. I've owned this because I feel like this is a value. Actually, this is a sneaky value stock. They make some money, man. What did they make this quarter?
They made 58 cents per share on a 33-cent estimate. Overall revenue $529 million versus $449.
Sleepy.
It's a sneaky value stock, trading with a PE of like 28.
Yeah.
So, and it's got some growth to it too. This is a Mitch name. I've liked the name. I'm in from 40, so I'm down in this. And I held this one. I sold a lot of my tech names, even some of them at losses in my swing portfolio. But I held this one because I feel like I feel like gaming's not going away, and I feel like this is a story that could eventually get hot again, and it's not a ridiculous valuation. With that being said, the resistance is so clear, Harlan Payan style, 35. It's got to get above 35. So I wouldn't be coming in and buying it here at 35 even until we can get above and break out. But I said I own this. I'm planning on holding this one. You got to hold some, growth names, and I feel like this is growth at a reasonable price. You can't just liquidate everything. So I'm holding. I held on to Corsair. I made a decision when this thing was like 37 and breaking down. I was like, okay, this could get ugly. And obviously, I didn't think it was going all the way to 28, or I would have sold it and tried to rebuy it. But you never know everything. There's no crystal balls. But $35 is a key level for that. Can it get over it today and hold it? It's an ugly tape. So the stock's performing well so far on a very ugly tape today. I hope the tape can actually, not impact the stock price. Because I think if this was an update, I think Corsair would have been up a lot more.
We're traded up to 35.5, and you see this resistance here. I put it with these lines. Let's see what this high is here. If this is really the go-to stock that you want it to be, it's not only going to take out 35.27 today, it's going to take out 35.86 as well. Those are the two highs in the 35 handle that you have to contend with. This whole gambling thing, I mean, I just think people are losing a lot of money, and they keep coming up with these promotions. I think, you can $1,000 and that and everything. I mean, I know
you've given this argument, Joel. It just doesn't hold water that gambling is eventually going to go away because everybody loses all their money.
Wait,
it doesn't go away.
I want to be clear that Corsair is not a gambling.
Yeah, Corsair is video gaming.
Yeah, it's video games. So
okay, and I'm bullish.
Okay, cool.
So
okay, what about Avis Budget here? Because this company just reported earnings. They're not profitable for the fourth quarter in the last 5. It's been on a ridiculous run. Let's take a look at CAR. I'll give you the numbers here. They were out this after the close yesterday. Q1 EPS, they lost 46 cents per share versus a $2.44 loss estimate.
Oh.
Sales, they actually, had 1.3 billion in sales, which is well above the estimate there. But no guidance provided. Not a surprise. I don't know. This thing's been on such a.
There's a huge bubble in this stock.
Yeah.
I mean, I know we think you can't rent a car. We're all going back on this reopening trade. We're all going to go fly places and rent cars. Uber and Lyft were eating their lunch before, and they're continuing at their lunch. What a gift at $89, even $85. I feel like when we look back at car a couple of years from now, it's not going to be here. But anyways, I mean, the market doesn't seem to care. It's all about the reopening stocks, and this one's a reopening play. I don't understand how the stock can be at all-time highs. It's crazy to me.
Boy, we talked about this one in the At the Close show, and it just was telling you there's a seller there, right around $90, just under 90. You had those daily highs, 89.70, 89.64. Then yesterday they let it get over 90, and then they sent that order to the floor. Sell me 2 million down. Well, not 2 million because it doesn't trade that much, but sell me a couple hundred G's down to below 90. That busted it. Caught all the people that thought it was breaking out over 90. I'd use yesterday's low. Like if you're a long-term holder in this, let's see if it comes up and fills the gap. If it fills the gap, I think that'd be your first area of resistance. I don't think you're going to see the close of 89.01 and just too many green candles in a row. We're going to have I think, well, we already do have a thick red candle. I think you're going to have one today and then maybe a couple more. I don't know how low it could go, but still, if you're whacking this thing at $86, you're $4 off the all-time high. One hell of a move. Why worry? Why fret it? It may have turned on this report.
It may have, but it's still in favor too. So just as much as I dogged and I said I don't understand what's doing up here, you cannot argue with the trend. The trend is still up. You're probably going to find buyers down in the low 80s because this is a stock that everybody thinks the money is going to rotate into, and and it might. So
unless that guy from Archegos or whatever has it, then it's not going to be.
Well, the Viacom and all of them.
Yeah,
they've tried to rally and they just can't. So I mean, even though he's out, I mean, all those stocks that he owned continue to leak really. So this is it's just a tough market. If you're struggling in April, you're with a lot of other traders and you're with a lot of other investors. If you're a long only trader, despite the SPY making new highs and you wonder what you're doing wrong, it was not an easy month. It was not an easy month for trading. There was a lot of chop and slop. I'll put it in perspective. I made on my day trading and overnight trading, I made half of what I did in March. It was one of my worst months in over a year, April. I still made some money. I made some good money. I don't even know if I had a down day, but it was making a lot less money.
I think you're gonna have a good May because I think the Vol's coming back. I think I'm going long the triple D May calls.
I do
here.
better when the market's going straight down or straight up. I don't do the chop. It's hard. I mean, I say I'm fade trades on, you're buying rips or buying dips and selling rips, but it's hard. And I was doing really well in my swing trades. I'm not even doing any swing trades right now. Like people keep saying, what are you buying long? What are you buying? I'm just day trading and overnight trading because there's just not a lot of setups, not a lot of sexy setups to like come in and say, oh yeah, this looks good.
What about on the short side? What about on the short side?
Yeah, but it's been difficult because you think, okay, we're going down, we're chopping around. So it's like, okay, well, we get short this thing and then it starts going away and then it comes right back. The buy the dippers come right back. I keep trying swing trades. I keep getting stopped out on stuff, really. Every time I try to put on a swing trade, I get stopped out on it. If you're using stops, it's been a tough market. You get stopped out on everything. So it's a tricky market to trade right now.
All right, let's bring on our guest. First guest of the day, Nick Shaheen, author of Create Income with Option Spreads and Benzinga's Option Newsletter. Nick, good morning. Wait, he's on mute. Hold on. Nick, check your mute button. All right. Well, Nick will be here when he's here. How about that? In the meantime, let's go. Let's go to the iRobot thing. I looked at that chart. I've forgotten that iRobot got all the way up to 197. I think that was on
that was Reddit.
Yeah, that was
It was a high short interest stock.
Oh no,
that's what I thought. Anyway, earnings were out this morning, and talk about a growth stock. This is a growth stock, and the earnings are what they are. The earnings were good on a year-over-year basis. They gave some guidance that was fine, but
jeez.
Right. The earnings were fine.
Hey, Nick is here.
Yeah. So I'm having one of those weeks where everything in the technology world is revolting against me, including my voice. I've lost my voice. I've done some presentations. No big deal. I can still smell stuff, so it's not the COVID.
I can still smell stuff. Are you sick? Like, what is it that you got?
I'm not sick. I just did too many presentations. I did lost my voice. That's it.
You lost your voice.
I spoke too much. That's what I did.
I do that
too much. So I've been listening to you guys, and I've been listening to you guys, and I agree with everything you said, Dennis. I know what you're saying about the trading swings and hard. You're you're forced to do stuff that you don't want to do, and so anyway. Last night, the Nasdaq was wobbly. It had a downtrend during the day, and then it went flat a little bit. I thought, a little sneeze could get it another leg lower, so I stayed short the Nasdaq overnight. So that looks like it was the right thing to do.
It's been tricky though. I mean, and you're on the other side of it, so maybe the chop doesn't hurt you because you're always rating premium there. So, but what do you think? Like April was a tougher month for me as a trader and an investor. What are your thoughts here as we come into May? Are we going to see more of the same, a lot of chop and slop, or are we going to start trending in a direction? What are your thoughts on the overall market?
I think there are some vulnerable areas that you can pick on. Yesterday, I sent out a short AMD trade, which is a stock I love. And I was long into the pop. I got out, not perfect, but high enough that it was a nice trade. And yesterday I said it might be smart to go short AMD, not picking on it, but I shared before my screen, and I said, how it's got a huge consolidation zone on top of a stick with holes in it. So that's what there's big risk below, down to like 65, 62. There's like nothing on the left side holding it up. One little hiccup through no fault of its own, even just a market-wide hiccup, can just start a quick trip down there in order to close those holes. And also the banks, I would say I can short Bank of America. When I say short, I don't mean outright sell the stock, because that's ridiculous after what happened to GME. I would never do that anymore. I would do like a $10 wide debit put spread, or a naked put buy on the XLF, for example. I read a note overnight that apparently there's so much money floating around that the people don't want to borrow anymore.
I also read that note.
Yeah, and it was from JP Morgan, and it's the gods of banks, so it becomes law. So I wonder how many experts are going to go on CNBC now and toot that horn, that too much money. Also, this week when the Fed spoke last week, was it? I don't know if you caught it. He almost gave us a number. And, he said the frothy thing, Powell, but then somebody asked him, well, how many good reports do you need? Well, he said, well, this is one of, and stopped. Can you imagine if he had given us a number? Because we're going to get one this week. If we get a hot jobs number, I think the markets will wobble.
Well, the market is worried about a number of things, and obviously it's not rewarding, a very good earnings season so far. I mean, the majority of companies have beat, and they're going down on this, and that has to be concerning. I mean, if you're not going to reward the companies like Apple when they're doing a $90 billion buyback, and you're not going to reward Amazon with their huge buyback as well and blowing their numbers away, it becomes difficult as an investor.
I will reduce it even to less noise than this. I agree with what you're saying, but let's take this scenario. The only thing propping up the market, let me rephrase, the only variable in the market, it's not money, it's not good reports, it's not earnings, it's sentiment. That's the only variable. And its sentiment is so tied to what the Fed's doing that if the Fed sneezes, we're going for a ride down and really fast for a really long time. I'm not that guy. I don't come here and raise the flags, but I'm telling you, watch the Fed's hands. They gave us a lot of weak points. His entire question and answer session was based on, hey, we have so much unemployment, we still need this. I contend that the unemployment numbers are wrong, and we don't have as much unemployment numbers. I'll give you a silly example. My wife was scheduled to go to the airport at 5:30 in the morning. She scheduled Uber 2 days in advance. They couldn't find a driver for her. So if people were desperate for money, they'd be a driver at 5:30 in the morning. And we don't live out in the boonies either. So we have 4 freeways right around us. So it's just bizarre.
When you say sneeze, you talk about taking rates up, or is that what you meant by that?
Their hands are going to be tied if we show 1 million jobs, over 1 million jobs, over 1 million jobs, because he told us, he spent an hour answering questions and everything centered around, we need to get the job things done. That's their job without creating inflation. He's telling us there's no inflation. I call bullshit on that.
Oh, yeah.
There is what? Houses and cars have never been more expensive. Lumber has never been more expensive, maybe, but it's super high right now and hard to get. Everything is more expensive. What inflation are they measuring? They're either measuring the data or their data is broken. The machine is broken.
The machine's broken.
Yeah. So regardless, so he's giving us 2 variables that are driving his super duper 140. Fed is key. And if these 2 things are notched where the report comes out as strong as last time, you better be protected. And there are easy ways to be protected using options. First of all, book profits. That's not a shameful thing to do, even if you miss out on upside. Book profits. That's the best insurance you can buy yourself. They can't take that back. Buy a put spread, sell a call spread, buy a put in the stocks you own, sell a call, covered call in the stocks you own. What's wrong with buying a little bit of insurance? If you can't buy insurance at all-time highs, when the heck can you justify buying it?
What about some of these dividend, higher paid dividend stocks?
But they're inflated. I said to go buy Exxon and Chevron, even though their businesses were in the toilet and everybody was talking ESG. They were paying 10% dividend and 7% dividend for Exxon and Chevron, respectively. Now everybody loves them after they rallied to high heaven. Well, even they won't hold as well, but it's better than nothing. So, yeah, the dividend will give you a little bit of cover, but there's no substitute to not losing capital.
What about AT&T or Verizon or something?
I don't like AT&T because I don't know how they stay in business. I've been their client on several different things, and I hated every one of them, and I couldn't get out of it. But it does pay a good dividend, and they're doing something good with the balance sheet, I think. So, yeah, I don't hate it, but I don't love it. I mean, if the markets are falling, AT&T is going to fall too. So why on earth would you not protect the whole portfolio? I tell you what, Dennis, guys, I get so much pushback. I recommend like dozens of trades a week. I recommend 1 debit put spread in the SPY. I get more question about that. Well, it's not doing well. What am I going to do with it? I was like, dude, if it's not doing well, that means everything else is doing well. So it's doing its job. You don't cancel your insurance because you crash your car. You keep your insurance. So I get more pushback on the 1 debit put spread I suggest. One guy.
People
Jesus,
don't
man.
want to hear anything bearish. And, that's why I take a lot of heat, and Joel does too. Like, we'll come on and I'm bullish, I'm bearish, I'm bullish, I'm bearish. I flip all the time because I'm a trader, and maybe, my short-term mentality gets me a lot of times in the longer-term stocks. But, I mean, there's two directions with the market. It's not always going to be up. And, I mean, we've had this relentless bid forever.
Crazy. Yep.
Even on SPY, I mean, if the rotations kept us up, we need a cool-off period. And, I'm not saying the end of the world's coming here, but there's a lot of things that, we could still worry about here. And I think the market, the way it's reacting to the earnings, doesn't look healthy.
I was worried going into it. I've been cautious for a while. And believe it or not, we didn't miss out on much upside. And the iron condors are working great. For some reason, if you set it up to where you're modest with what you're asking, iron condors is when you sell a bullish position and you sell a bearish position. So you're range bounding the market every week. So they work. Yeah.
Nick, I just pulled this up. So show us.
Okay. So these are the 4 indices. Top left is the SPX, and then on the right is the NDX. And then you've got below it is the RUT and the DIA, the ETF. So if you can find a range that's going to survive for the week, if you can forecast a range for the week, you can sell a put spread. This is a bullish position that requires price to stay above the box, above the line. And if you sell a call spread, that's a bearish position. So you essentially hedge your own bet, and you reduce the money at risk because you can't lose on both ends. You lose either up or down. And you collect a premium, and it comes out to be like 20, 22, 25, 18% yield in like 5 days, 5 trading days. So it's worth it. It's not easy. Nothing is easy if it pays 20%. Okay, so this is not easy work, but the tough work is just to pick the range. And the boxes are my ranges every week. And only a couple were busted on the upside, believe it or not, and it was the small caps when we went ballistic. So most often they work. So statistically, they are viable trades. If you want to learn them, they're kind of fun. And that's what you can do. Like Dennis said, you're trading every day. This is like pre-trading for a whole week.
Nick, last week, and I think it was on Thursday, we came down pretty hard. And you said, I saw your tweet. And you're like, you said, we're coming to like a must-hold area. We need to hold there.
What day? Last Thursday? So
I think it was Thursday.
29th.
Yeah.
I'm trying to find the candle to see if I was.
And I was looking at.
Okay.
Yeah, the low for the week was 63.65. We had a 66.75 low, and we had a 68 low. So I was right there with you. Because that was actually my level for the week is right here too. Now we're breaking down. What would you need for a recovery here? I mean, because if this is just the same scenario that we've had for the past 6-8 months, we're going to come down here. The Globex low is going to be the low of the day, and we're going to rally up, and we're going to be green on the session.
Likely does. Likely does.
Listen, if I'm right about sentiment, the actions won't be the same. Okay, so because it is the variable, trust me on that one. The markets don't need a lot to rally. They need like 3 things. They need money flow. They need for systems not to be broken. Neither of those 2 are happening. The only other variable is sentiment. And I'm telling you, as soon as sentiment flips, the machines will flip and follow it all the way down. So that Thursday candle you're talking about, that was the pop, right? Candles that pop like this out of nowhere and then give back everything within hours are bad omens. So they have follow through down. Now, yesterday's candle almost bailed them out with the pop high, but they couldn't hold it. So last Friday, Saturday, I recapped the market. I said, the only thing I'm looking for this week is follow through from the mega caps and see what the markets do.
You're not getting it.
That's yes. So Monday, Tuesday were my important points to see what happens. And we'll see how shaky they get into the Friday report. So we get ADP tomorrow, maybe a preview of jobs, but I don't know how well forecasting it is for the NFP. We have jobs Friday, right? So that's the important one to look for. So look for jobs Friday. And if I were you, I would be ready. So there are some things indirectly you can be ready. So if I'm right about the Fed getting wobbly, the dollar is going to go to high heaven because it's been in the toilet for so long. And if the Fed's hands indeed get tied because of super hot jobs number, go back to 2018, February 5th, I think. It was a Friday. We get a hot jobs number. The market crashes for the first time in years. And that was because people said, oh my God, the Fed's going to start raising rates sooner than later. And too hot, too many jobs, wage inflation. All these words came out of nowhere. That's what's going to trip up this market. Mark my words, it's going to be the Fed's hands getting tied because of something that's going to take away talking points from Powell.
Well, we'll find out, guys. Even if you don't like the bearish talk, you can't deny that there's logic behind it. Nick Shaheen is the author of Create Income with Option Spreads. I put the link to his newsletter in the chat. It's also in the description of this video, so subscribe to that. Nick, always a pleasure. Yeah.
I appreciate the opportunity and the good word, but one thing, I am bearish on the price action, but every chart I have has buy the dip alerts. Okay. Yeah. So I'm not like bearish and let's go to zero. Yeah. I'm realistic. I'm bearish and I will buy the dip.
We haven't broke the buy the dip mentality even on myself. I look at this thing and the first thing that pops in my head is still buy the dip because it continues to work. So like I look at this buy down today, I'm like, well, what sector is going to rotate to bring us right back up? You know, like where is it going to probably be something? So, I mean, it's hard to get bearish the overall market. It's been the best place to. It's been the safest place to be right now.
And there are easy way to short other than getting long the dollar. That's shorting markets.
Yeah, it is.
Shorting the EWG, which is the Germany ETF. The only reason, pull up a quarterly chart on it and see the 2 times it failed before, 2008 and 2018. Lower high, and it's coming into that area too. So why not short it with the puts? They're cheap. They're like 20 cents, you know.
Look insurance.
Yeah. Okay. Later.
I like cheap insurance.
EWG. That's interesting. I haven't looked at that one. I don't think ever. Nice call. Thanks, Nick.
All right. Later.
All right. Let's go back to iRobot for a second, and then we'll go to the chat. There's a couple questions from chat I want to get to. But IRBT, I mentioned it was a Reddit thing. 197. It's down to closed at 103, but this morning it's now down to 92 off their earnings report.
I don't know. Like at a certain point, it's not bad. I think at 80, I actually might be interested in rebuying this because I sold my iRobot before the whole Reddit thing. I never get to participate in those Reddit things. I sell too early because I don't hold online. I've got back to 80. You know what? It's actually a decent value. I think the company is a solid company. I think they're coming out with different products. It's, you know, everybody just thinks it's the Roomba, but you know, they got other stuff cooking there too. I like the company. I kind of like the dip. I think you might be early at 92. I just think all this stuff's out of favor, and this is a breakdown through 100. So why catch the falling knife? But you know, maybe you know it starts to round at some point in time. It gets more interesting. I'm not jumping in. I like it. Maybe put on the watch list, but I'm not jumping in down $11 today. Not on day one.
I got it. We've had it since like the 50s when Bill Santiago. Boy, I'm going to dig Bill up. He hasn't been on in a long time. He liked it and have it, never sold it. Too? Yeah.
Hey,
like 57.
You held through that whole Reddit, never sold it?
Yeah. No.
Joel Loki has like the most diamond of diamond hands that there is.
Joel doesn't sell anything.
Joel never sells.
Lisa really doesn't sell. Joel's not allowed to sell.
The only thing we sold is GameStop last year.
And you had to really fight to sell that. You sold at the top. Like Joel's the best. When Joel sells something, it's the top. He sold that thing like $350.
I remember when Joel sold Bitcoin. When was that? Like the December 2017, right? It was like
that was the top,
right?
When Joel sells something, you actually got to turn around and sell it because Joel is right. Joel wants to sell something is a different story than actually Joel selling something. Because if Joel sells something, it means Lisa sold something. So Lisa sells.
I don't know.
She's gonna call it top
I don't know. She might. She'll look at all the charts and she'll say, "They're all going up. What are you nervous about?" You know, that's just what she'll say. And I told you her statement before. The reason she loves her stocks because when they go up, she makes money, and when they go down, she can buy more. Yeah, so
that's a good investor right there. That's the one.
Yeah, I don't know though. I don't know.
It seems to work for her. You guys have been all the good ones.
I don't know.
I sell way too soon, man. I sell everything way too soon.
For this one, I don't know. The sellers are done. iRobot. Someone's bringing in some stock here at 92.20, 92.30. They're not chasing it. They're not paying 94. So if they get filled in, get all they want at 92, then I just say if you really want to try and catch this thing today on the bottom, you just kind of got to scale in. And I don't know if there's any daily lows. I don't think we're going to 80 today. So try and find some daily and weekly lows. Even I don't even know if we'll dip into the 80s right now, but right now, a little bit of buyer, 92.20.
All right, John Conrad had asked us about DAC, which is a container ship stock, and they all went up yesterday.
DACS?
Detroit Athletic Club?
That's what it is, Joel.
The DAC.
DAC. Yeah, it's a container ship play. So all these container ship stocks have been, whether it's, you can look at.
Yeah, the smaller ones.
Yeah, like SHIP. You can look at ESEA maybe. Here.
I didn't realize DAC was one in there too, but yeah, I guess it is. It's not a stock I actively trade. It's breaking out. I mean, I own a couple of these things. I got this PANL one, Pangeo Logistics. I also have NAT. They've both actually been pretty good.
Oh, you got NAT?
I've been in NAT for a little while, yeah.
Oh,
I'm actually right around 330, so I'm not up hardly anything. And it went up a couple. I've been in this for like 6 months. I don't know why. I got back into it somewhere in there for some reason. I don't know why.
Sounds like solid investment advice.
Wait.
I got talked into it by somebody. But
DAC, let me see. Detroit Athletic Club, big candle yesterday. Trading up again. So, you really didn't. That was the first day of the move. I mean, you kind of been moved up, down, up, down. So 62.76. Let's see what happens there. We're trading 62.55. That's yesterday's high. Big volume yesterday, too, on that move. So more legs in this one, I think. Look at 61.62. That's high close of the move. Like to see it improve on that today. S&P's kind of coming off the bottom here. We made a 57.25 low. I had nothing there. 63.75 right here. That was the low from last week. So we'll see. Get a reset. If you wanted to buy last week's low, here it is.
All right, there's so many other things we didn't get to.
I wanted Pfizer earnings, widely owned stock, getting a nice lift. I own Pfizer long term. Well, we'll give us the numbers. That's your cue.
Yeah, I'll give you the numbers, and also they talked about rolling out the vaccine. So EPS for Pfizer, 93 cents per share last quarter versus 78-cent estimate. Sales of 14.6 versus 13.6 billion dollars. They're raising their earnings per share guidance for the year. And raising their sales guidance for the year as well. They also said they expect to hear back shortly from the FDA on their application for their vaccine in individuals ages 12 to 15. And they could roll that out as soon as they get the okay from the FDA on that.
Pharma has been dirt cheap. I own them all. They've run a little bit now, though. So you've run in Pfizer. You're up 10% in a month. It's a big month. It's hard to buy it up here. I'd wait for a dip to buy it, but I still like it. I own Pfizer. I own Merck. I own AbbVie. I own Bristol Myers. All of these. Bristol Myers got hit on the earnings. Merck got hit on the earnings, but they snapped right back. Why? Because they're dirt cheap. I kind of want to own Gilead. I talked about that one. Beautiful.
Why don't you just
yesterday.
buy it? So we don't have to hear you say you want to own it.
I should just buy it. But it's like it's been the dog of all dogs. Every dog has its day, though. And if they are still rolling into value, I think on dips, not rips, not buying Gilead after it just ran $4. That's like the move from the last 2 months it just had in 2 days. If I was long, I'd probably turn around and sell it today because it just keeps chopping around. But you back down to 64, 63. Yeah, it gets interesting again.
What do you got in? Can you take a look at the book at Pfizer because it got up to 40, 60 something?
Yeah, I can look.
And now it's back at 40, 14.
Probably something at 40.
It's probably something at 40. And then you got to worry about 40 and a half.
My Joel.
Oh no! What do you got for me?
We are loaded up. I mean, what's the volume on Pfizer? 2.3 million.
Yeah.
It's going to take all that volume to open over 40. So you got to watch just paying over those key critical numbers because you have all this open book the new NYSE liquidity that's going to become active at 9:30. Starting at 39.80, we'll start at 20,000, 39.84, 30,000, 39.85, another 10,000, 39.90, 30,000, 39.95, 30,000, 40, 1.1 million. So that's a big offer. It is going to struggle to open over 40. It needs more volume here to open over 40 just to get through that. So again, it's all just the math and adding it up. And this is my edge. This is what I look at is things like this. Has it done enough volume to take out the 40? Probably has, but it would have to be all buy volume. So it's going to struggle to open over 40. If that volume increases and ramps up, it might. And, does it take it out at the open? Probably. So does it move up after that? Maybe. But am I paying 40.16? No, I probably would try to buy it on the open at 40. But it's coming in enough. How high did we get?
40, 60.
65.
Yeah, see, that 40.60 buyer is just an uninformed buyer. That's an easy short. I haven't looked at it. But that would have been an easy short because the book is just too loaded. So you got to look at those critical levels. The stock hasn't been at 40. As soon as you see that the stock hasn't been up through 40 in 6-8 months, it's a big level. There's going to be some institutions perched there. And just because they're showing 1.1 million doesn't mean it's only 1.1 million. It could be a lot more for sale there. So you're like, well, that doesn't make any sense. People are probably don't understand. It doesn't make any sense trading 40.18. This New York Stock Exchange open book orders that I'm looking at are not active until 9:30. So these orders are going to hit the market at 9:30. So then there's going to be buying pressure, but you probably have our book and traders that actually use this stuff shorting the stock of 40, 50, 40, 40, 40, 30, saying it's unlikely to open much over 40. It could open a little bit. It's not enough volume now where I don't know if shorting 40.15 is advisable because it could chew through all that and maybe open a 40.10. Maybe 40.15, but if it increased volume like 2 million shares in the next 30 minutes, which it might, then it could open a little bit higher. But right now, it's going to take a big chunk to get through 40. So if I had to guess the open, I'd probably say like 40.05, and I'd probably be a buyer there actually for a trade.
You got to pop up to actually 40.65 and some good volume traded too up there. I don't know what people were thinking. I don't know if you're at your desk when that happened, Dennis, but man, a couple hundred.
I never even brought Pfizer up today.
Yeah,
too many other trades.
Yeah. Okay.
All right,
Spence.
Yeah, guys, I want to bring on. We just spent like an hour kind of shitting on growth, but I want to bring on someone who's in the growth game. Jeremie Capron, Director of Research, Managing Partner, ROBO Global. And Jeremie, good morning. Thanks for joining.
I'm going to say, sorry about that. I'm just going to say goodbye. And guys, I'll hang in the chat for a little bit longer if you want to throw some symbols here to take a look at. All right, talk to you later.
Thanks a lot, Joel. All right, Jeremie, you're with ROBO Global. You've got a number of your 3 growth indexes and ETFs that track those indexes. You're in AI, you're in robotics, and you're in healthcare tech. Like I said, there's been this rotation, right? Growth is coming off an amazing year. There's been a rotation out of that to some extent in the past couple of months here. What is the sentiment that you can read out there as far as the sentiment around your indexes or even the funds that track them as far as just overall like investor behavior right now around these admittedly very sexy areas of the market that have maybe come off their highs?
Yes, well, look, as much as 2020 was the year of the digitization of the economy, what we're seeing this year is that, that trend still remains very much in play. But in addition to that, you've got a very significant cyclical recovery that's happening. And so in a world of robotics and AI and automation, it's most apparent in the world of factory automation. And those are the companies that automate, manufacturing facilities and its production lines, its automotive, electronic devices, food and beverage, and you name it. So those companies were kind of left in the dust last year because of all the disruptions in the supply chains. But right now, the strongest area in the economy is really around manufacturing and logistics. Yeah. Right. So you have the boom in e-commerce that's driving adoption of logistics and warehouse automation technology. And at the same time, you've got the strongest PMIs, manufacturing PMIs in all key regions of the world, highest readings in sometimes decades, like right here in the US. So that's pulling a lot of demand for factory automation equipment. So if you look at the ROBO ETF, right? Last year, all the digitization and work from home plays led the performance. And starting around November of last year, we saw those stocks kind of cool down. But in the meantime, factory automation's taken over and is the new driver of performance for the Robo ETF so far.
I guess that was a question that I was going to ask you. Is you look at Robo, and and the name is robotics and automation, and you immediately assume, oh, like high growth tech. But in reality, the largest allocation is to manufacturing. So is this, in a way, is Robo specifically, could that be like an infrastructure spending play, right? As part of this Biden's spending plan, could this be a way to play that, maybe?
Well, there's definitely exposure to that, but I would tell you, Robo is not your traditional ETF. It's a research-driven selection of the best-in-class robotics automation companies from all around the world. So the big chunk of that is international, but more importantly, those companies are not your usual suspects. They are not the high-flying tech stocks that you see all over the media. A lot of those names are unknown to the average investor. So if you look under the cover, look at what the Robo is made of. It's really about finding the best companies in every area where robotics automation is making a difference. So you've got the technology enablers. Think about the sensing. Think about the compute. Think about the actuation. What makes an autonomous system possible? And then you have a range of different applications, of which manufacturing is still the biggest one. But look, robots are moving out of the factory floor and they're coming into warehouses, distribution center. They're coming into hospitals. They're coming into food and ag. They're coming into security and the energy sector. So this broad diversification is not a bet on a handful of tech stocks. There's real diversification. And you mentioned the highest allocation. Remember, the top 10 stocks in the Robo ETF account for less than 20% of total. So there's no concentration.
Sure. So it's diversified. I'm wondering, and this isn't just unique to Robo, but this could apply to any of your three indexes or ETFs. What is the exposure right now to semiconductors, and how are they affected by this global shortage of chips that we have?
Yes, really important point you raise here, because we've all heard how some of the auto makers in particular have been struggling to secure supply of chips, and in many cases those are not your what we call the higher value chips that the semiconductor companies are promoting right now. Anything around 5G and cloud and AI applications. No, those are the lower value chips that have a lower priority in the pecking order. So automakers have been struggling with that, but of course the beneficiaries of this trend is the semiconductor companies. So in Robo you have about 10 or 11% of the fund that's in semis. It's companies like NVIDIA that have become the de facto standard for the training of AI in data centers. It's companies like Global Unichip over in Taiwan that makes application-specific semiconductors for autonomous systems and AI applications. You'll find Microchip is in there also with some solutions at the edge. And in general, we believe that that shortage of semiconductors is a positive for the Robo members overall. It's a net positive.
Why? Why?
Well, again, because if there's a higher demand than supply, generally that's very good for pricing, and pricing is critical to margins in the semiconductor business.
Yeah, but isn't that going to have ramifications for supply chains and the actual development and production of these products that are in your index?
Right. So as I said, what the semiconductor companies are doing is that they're prioritizing production of the higher value chips. And what are those? They are the ones that go into cloud, into AI, into 5G and the likes. They are not the ones that go into the simpler applications typically around automotive. And that's why, just last week, Jeep announced that they had to shut down production there. So if Jeep shuts down production, is it good for the other automation companies, those supplying automation technology to Jeep and other automakers? Well, in a sense, not so much, because, Jeep is not producing as much as they would like, but Jeep is still planning out, their capital expansion plan and their in technology investment plans over multi-year periods. And so they're still buying the automation equipment. So net, big positive for semiconductor companies and relatively neutral for the factory automation equipment providers.
I want to ask you about, we talked about ROBO. What about HTech, which is your healthcare technology and innovation index, and HTEC? I had up on the screen is the symbol there. Is there a company or two or a segment of that you find most intriguing right now? Because there is a lot of overlap between that and ROBO.
Yes, there is a little over 10% overlap between ROBO and HTech. And HTech really is the result of our research work that led us to realize that healthcare is the next big economic sector that's going to be profoundly transformed by those digital technologies. And so if you think about how robots and AI impacting other sectors, right, it was manufacturing first, and then the sweet spot kind of migrated towards logistics, warehouse automation on the back of the boom in e-commerce. Right now, it's really healthcare that's at this inflection point. So think about it. We have thousands of surgical robots now around the world's hospitals. We have AI that can help physicians increase the accuracy of their diagnosis when they're reading medical imagery and biopsy results. We have things like miniature heart pumps that can be inserted through the femoral artery. We're looking at things like remote monitoring devices, like wearable devices, continuous glucose monitoring or cardiac monitoring. And I like to say, most importantly, now we have the genomics revolution. We have affordable gene sequencing, and that's opening up opportunities around early detection of major diseases, chronic diseases, cancer in particular. So you have the genomic-based cancer testing space that's booming. And then it also opens the possibility of custom treatments, individualized treatments, as opposed to the current business model of the pharmaceutical industry, which is, one-fits-all drug development. And that's very difficult. So all these areas are covered within HTech. We're looking at 9 different sectors. And I mentioned a few of them right now. I'd say the hottest, clearly, over the past years, have been telemedicine as a result of the pandemic, quadrupling of volumes across telehealth platforms. Digital health, the ability to leverage patient data or clinical trial data or drug data, derive insights and create new business models. So that's the digital health side of it's been very strong. And genomics, of course, because we've had some very promising results from, the CRISPR companies in particular, the first human patient dosing with a CRISPR for the sickle cell disease and also beta thalassemia. The preliminary results have been relatively good. So, CRISPR stocks have been on fire. Now they're pulling back this year, but huge performance last year. And then telemedicine, similar, dynamics in terms of market prices, stock prices, right? Very strong run in 2020 and now kind of consolidating here. And in the meantime, what we're seeing is that, again, that rotation into the more, I'd say, the damaged areas of the economy in 2020, those that are coming back stronger this year. And in the world of healthcare, it's typically anything related to elective surgeries, elective procedures that have been delayed to make room for COVID patients in hospitals. Those are coming back. So you find the medical instrument, surgical instrument providers and these types of companies are coming strong in terms of stock performance this year.
Jeremie, I look at your 3 ETFs, whether it's ROBO, whether it's HTech, or whether it's THNQ, and as I said, they all look pretty correlated. There's some overlap there. When you talk to advisors or investors or advisors or allocators or whomever. How are they using these? Are they owning one? Are they rotating between the three? Are they owning multiple? I mean, you seem to get some overlap there. So, like, how do you see people using these in their portfolio?
Yes, again, the overlap between Robo and H-Tech is around 10%, and similarly between Robo and AI. And those are the areas, in the case of AI, for example, you'll find that the AI compute companies are part of Robo. But the AI fund, the THNQ, is much broader because it includes not only the makers of the AI tech and infrastructure, but also the companies that leverage AI into their business model for, promising applications. So there's more breadth. But in terms of how, what's in the fund, you'll find that as much as Robo is very diversified, THNQ, the AI ETF, is much more of a tech fund. It's got more software, more semis, so very different animals. And then the healthcare tech fund is mostly healthcare, geek sector, but with a very strong layer of software and hardware tech. So how do people use that? Well, we find that typically financial advisors that will be looking to increase the alpha potential in a client portfolio. So they'll be swapping some of their more traditional, either global equity exposure for Robo, or some of them will look at swapping some of their tech exposure for Robo, like a triple Q. But it's mostly global equities, just given the nature of the portfolio, because 55% of Robo is international. And similarly, Robo is more than 50% small and mid caps. So when you think about where that fits in your asset allocation, again, I think it's part of your global equities allocation. And I think very clearly when we started that, 7-8 years ago, thematic funds was a nascent thing, and we've gone a long way. And financial advisors today understand how they can use their tools. Typically, a core exposure that will be like your low cost beta exposure to the broad equity markets. And to that, you have a more of a core and satellite approach. And in your satellites, you can use products like a Robo or an H-Tech or a Think.
All right, Jeremie Capron is Director of Research, Managing Director at ROBO Global, joining us here on Pre-Market Prep. Thanks a lot, Jeremie. Have a good one.
Thank you, Spencer. Bye.
All right, it is 9:18, guys. It's going to be a wrap for our show today. Here is the programming schedule for the day here on Benzinga YouTube. It's up on the screen right now. Live trading with David Green coming up next. That'll be at 9. It says 9:30. It'll be at 9:25. SPACs Attack at 11. We're doing a special show today, a special power hour from noon to 2. I will be your host. I know. Crossover. I'll be your host. We're talking to 6 companies that trade on OTC markets. So we're going to do a special edition of that show. That'll be from noon to 2 today. We're talking to some blockchain companies. Talking to I'm trying to think. I'm blanking on names now. Energy. I don't remember. You'll have to tune in. You have to tune in. Some tech companies. You have to tune in to Power Hour at noon for our OTC market special. Biotech Buzz is back today at 2:30. The At the Close show, 3 o'clock. Cannabis Insider 4:30. Trend Spider with Jake Wujastik at 5. Money Mitch at 6. Trading Nomadic at 7. Roel Report moved today at 8 o'clock. So that is our programming schedule for today here on Benzinga YouTube. If you haven't already, please go ahead and hit that like button. Let's do a quick like check. See where we're at for the day. Oh, 442. Get me to 600, please, before I'm done here. What else did I want to say? Subscribe, guys. By the way, you can get notified whenever we go live by just hitting the subscribe button to Benzinga or Benzinga Clips, which is our highlights channel. Check that out. If you want a free 2-week trial of Benzinga Pro, go to pro.benzinga.com. The link is up there on the bottom of the screen right now. pro.benzinga.com. If you want more than a trial, you want a discount, enter the code YouTube20. It'll get you 20% off of a subscription. If you know people that want to subscribe or that would want to subscribe to Benzinga Pro, you want to become an affiliate, you get paid for sending us subscribers. The link is up on the screen right now, benzinga.partnerstack.com. It'll get you a 30% cut of any subscription you send our way. So that's going to be a wrap for me. Thanks to our guests, Jeremie Capron and Nick Shaheen. Please, like I said, hit that like button. That helps us so much. You don't even know it. I don't quite understand how the YouTube algorithm works, but I know it likes the likes. I know that much. So, okay, I know we didn't get to all your questions. Joel's been in the chat answering a few. We will cover more of them on the At the Close show and throughout the day. I promise. That's right, Candyman. Folks are cheap on the likes. I agree with you. All right, David Green is going to be live trading the open coming up next. This stream is going to redirect straight to that, so you don't have to do anything. We're going to start here in a couple of minutes and just tune in to watch David Green trade and talk through his trades, and that'll be going for about an hour. So that's going to be a wrap. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. That's it for pre-market prep. Everyone, good luck at the open. I will see you on the next stream for live trading with David Green. And hit the like.